Although we finally got the camera nice and crisp, and we got a nice overcast rainy day in the background.
I know we didn't have to deal with any. Maybe we won't even melt the camera today by the end of the stream.
True,
Um,
true.
and yeah, I think it's gonna be a good one too. We're live, right? Oh, I was like, where is everybody? We got 10 people. Here we go.
Yep,
Yep, on time today. I'm very proud, everyone. All 10 of you that get to see me start on time with the new camera setup, hitting our stride here, Steven. And I think
of
Steven's
course.
gonna be here next week. We're gonna do another in-person
Yep.
one next week.
Hey, Joseph, thanks for joining in. What's up, Stephen and George? Glad to be back. Yes, we are glad to be back streaming. We have
Yeah.
an exciting update where our streams are now going to be available as podcasts on a new platform, Spotify. If you get our emails to notify you that the stream is coming on, you could see the link in the bottom of that, or you could look in the YouTube description. I added it there as well. But you could follow us on there. They're not going to be live there, but they're going to be posted later the same day. So if you want to watch them later or just listen, you can find them there as well. What's up, Wolf? Glad. Are we glitched? You're commenting we're glitched. I don't think we're glitched. I think we're good. Nice to see you joining us.
Yeah, we got some nice regulars here now.
Mm-hmm. Yeah, yeah. Yeah, let me read off some of the topics in case you guys are super curious about what we are going to be getting into today. By the way, I should mention we are at 998 subscribers, so we are two away from 1,000. We're climbing up that ladder, but I hope we hit that by the end of the stream. I feel like we can. So if you're watching the stream and you're not subscribed, click that button, please. Likes are good for the YouTube algorithm as well if we want this channel to grow and the YouTube to grow. So click the like button. But here's some of the stories we're going to be getting into. So we're going to talk about a new diversification portfolio that Prospero is launching, as well as an app feature that's also coming out. Thanks for following us on Spotify, Joseph. I see we got some questions, and we'll get to them after I read off the topics, I think.
A
Um,
little ahead of our skis there, Stephen. We're not like, we shared once a diversification portfolio. Like people could follow that. We're not committing, we're not committing to doing that forever or whatever. It's like a point in time. And I'll talk about that in a second. But like we're not doing that every week. I mean, necessarily. If people are saying that like we love this, we want you to do it all the time, we're always very responsive. But like, we'll wait for people to say that, Stephen. Don't create a bunch of work for me that doesn't have to exist.
yeah, we'll see. I guess we'll see what this response is. Um, but next, there was a stock that reported earnings, and maybe the Prospero signals sniffed out how they were going to do first. It was First Solar, and we're going to talk about them, but we're also going to talk about maybe some of the best long-term investment trends that are in AI, um, as the market has become so hyper focused on AI. It'll be good to kind of explore some of the different areas of the market that maybe they're getting underlooked now that AI is so popular. And then there was a merger in the Indian businesses of Disney and Reliance that was announced today. We'll talk about what that means for Disney and more so maybe how the India economy and business world will affect the stock market going forward and how it relates to China, the US, and a little bit of international stock talk. We got a lot of people following the Spotify. Thank you guys. That means a lot. And then we're actually going to end today's live stream with a lot of EV topics. We have some Apple EV news. If you haven't seen that yet, I want to hold off to announcing what that news is until we get to it. But it was big news for Apple. Mercedes ended a goal of being 100% EV by 2030. So, a couple things happening in the EV space that might not be too positive. Right when Tesla announces that their Roadster is finally going to be available for ordering and shipping next year, and they gave some crazy specs, which I'll mention when we get to it. So a lot of things to talk about today, and I'm sure we'll get some nice topics from our commenters. We already got some. You want to jump into some of these questions, George, or
Yeah.
still got a few minutes?
So we get the short term, long term question a lot. And we do that for, we do that for a reason, because especially short term, we leave it vague because it really is like up to you. Prospero is built to support your strategy. Like if you're not comfortable trading things short term, you're already trading them a day, 2 days, whatever. Prospero shouldn't be the thing that makes you do that. Like it can be the thing that maybe gives you the comfort level to start answering that question for yourself. Like, how long should I hold this stuff? But it is not there's no such thing as a set, forget, fire signal when it comes to short term. So like what we guide on is like you should watch it, because like the thing is net option sentiment could go from like 80 to 20 easily. I've seen it all the time, and that's like kind of from the top to the bottom of the scale. So like we don't want to tell you that like to hold it for 24 hours regardless or whatever, when that's not the case, right? Short-term things change quickly. So like what we say is, in my experience, a good short-term setup is good for, I would say, anywhere from 24 hours up to 30 days. Like that's the range that I kind of look for in terms of a short-term trade, which I'll really say like, okay, if it hasn't moved where I expected something by now, maybe I'm missing something. I definitely like, I'll probably give up before 30 days if I'm looking at it, that kind of thing. But, I do think that's why it's important. Like if, as like a highlight, if I'm using like a short-term signal, I definitely start to get worried if I haven't seen it pay off after a week or two, but I might decide to hang on if I say really like the long-term setup as a supporting character, right? Like if let's just use some tangible examples. If I see something like Nvidia that I just took a short-term ride on that had 100 net option sentiment, right? But had 65 upside breakout, right? When that started to fade, it did not have enough long-term signal juice with that lower upside breakout rating for me to hold on, right? But if Nvidia, the price started to go down, but net option sentiment remained high, and it had, say, above an 80 upside rating, I would be more patient with it, probably. But so short term is tough, and I think the big takeaway is like you got to form your own process on short term trading, and Prospero is a great source of that. But you got to have your own view, and it's all bespoke, right? You can't have a system where you're just like, okay, I do this exact same thing every time, because the market isn't that kind in the short term. It's got to be very individualized, those trades, and formed to strategies and outputs very customized to the company and what's going on with it, as well as like some kind of macro view, right? Then we have long term is a lot easier and it's a lot shorter. We've back tested that for about a 1 year hold time. So like it's easy to look at things, and obviously our back test for upside breakout actually is a pretty cool back test. I'll throw it in for you guys so you can see. But we can show you how to do that. But you can see basically when we grabbed I'm so bad at multitasking. When we grabbed portfolios where upside breakout was 80 or higher, so in our bell curve, in a 5-year back test, with those portfolios of 80 or higher upside breakout, when they were held for 1 year, those portfolios outbeat the S&P 500 80% of the days that were tested, right? So we feel very strongly, especially on the testing of that upside and portfolios made up of upside breakout. But the flip side of that is that you could oversample with sectors, right? Especially if you're buying like all tech and you're not like doing it, you're not necessarily like decreasing your risk on that. So it doesn't matter what you buy and how you allocate in addition to that, because when we grabbed all the stocks with upside break of 8 or above, sometimes that portfolio was as large as 50 stocks, depending on how it broke out. So like a lot of the times, as you know, with the S&P 500, you're not going to get that safety without that diversity. But the flip side is the portfolio was around 11. It was around 11 stocks at the bottom. So obviously those 11 stocks on the lower end is much lower than buying the S&P 500. But that's the caveat that I would give is like generally it's pretty like it's not a bad strategy, especially if you do like profitability plus growth above 120 and net option sentiment above say 70 and then grab those upside stocks of 80 or above. That's a pretty good way to manage that whole situation, risk wise. But as I said, if you're overloading on say tech or consumer discretionary, I would say especially, you're going to have a situation where you're maybe taking on more risk than you think. So that really matters when we're talking about like diversification. But yes, for those things upside, if you have basically a 1-year hold target on those, you might have to be patient, but we're very confident that you'll make money on those in a 1-year hold. But for the longer term signals, we say you can really like it might like be as little as 6 months. Like obviously, if you see a stock move up like 30% and the upside breakout starts to go down, like you see it say go from 90 to 80, it might be like a nice time to leave and take your profits. But if you hold on, like in a situation where you haven't seen the gain happen yet and the upside stays high, you might have to be more patient. You might have to hold for longer than a year. But again, that's really up to you and your risk management and how you approach things. Did that answer everything for you, Kyle? All right, I'll move on to the next one then. What happened to AMR? I could actually look. I thought it was a more complicated situation. You could actually see AMR's net option sentiment go down before this dip. Go back up again, but go down again today. Go back up after the stock went up. I'd say post earnings. But the net option sentiment is back down again. So I'm saying that like, yeah, that's a definite sell signal on AMR because you're seeing like you're seeing lower lows set on AMR. And like, you might say like, oh, it's at 75 now. And it was only like, 83, 85, like, isn't that still a good value? It's like, yeah, 75 is still a decent net option sentiment value, but we always tell you momentum is so important on net option sentiment. And like, yeah, like that's not an insignificant decrease. I definitely think it's a sell signal on AMR, given that net option sentiment. If you want to be a little more patient and see if that number gets back a little higher, then that's not a bad strategy if you're a long-term, you're a long-term holder because it might turn back around. This might just be getting hit a little after earnings, but that's really up to you. Thoughts on Microsoft? That is actually very interesting. That much upside breakout. Is I don't typically see it that high. Wow.
Good call out, Jonathan.
Yeah, I'm thinking about buying it. I'm like, I don't want to be too hasty, but I was definitely being like, shit, I want to buy that right now. But yeah, I am going to look at it in trading view just to see if it has like technicals to match because I might buy it right now. But that's huge. Like my biggest problem with Microsoft has been that lower upside breakout. So yes, I'm very keen. The technicals look not great right now, so I'm not going to jump in. But like, yeah, if you're a long-term holder, that's a green signal from Prospero. That's huge. I mean, again, like we're saying with AMR, if you want to be cautious and wait a few days to just see if that's like a blip, someone's making like a huge swing trade, and it goes back down. I have seen that happen. And in case you're wondering, like, oh, like, well, don't people make swing trades in the short-term options markets? Why would the long-term signal have it? Well, some institutions don't trade short-term options at all. And if they're going to swing trade something in the options markets, they'll only do it in the long-term options markets, even on a swing, because shorter term options have obviously a lot more risk exposure. So if they're wrong, they'll lose a lot more than if they do it in the long-term options markets. And the way that I look at long-term options, it's like it's somewhere in between the equity and a short-term option in terms of the movement you're going to get on a price movement, right? So it's not necessarily like that bad idea for you or an institution. I really like leaps. I almost always like long-term options. I almost always buy leaps instead of the raw thing. Like if I was going to buy a stock like ASML, for example, which we're going to talk about our diversification portfolio in a second. Like ASML, I would never buy the stock if I wanted to buy it because it's trading at near 1,000. If I wanted to buy it, I would buy leaps because I'm going to get cheaper ownership of more that way. And as I said, it's not as expensive or risky as a short-term option. So like, yes, I'm not trading or investing anymore, but when I did, that's what I did.
Yeah, so you mentioned the diversification portfolio, and I think we could jump into that now, and then maybe also kind of highlight the new feature that's going to be coming into the Prospero app and how it can be used by our viewers of the stream.
Yeah. And like those of our like those are the people that watch, we love to reward our loyal stream watchers. So as always, we'll share something from the paid letter for free here. That's the diversification portfolio. And I did a few things here, and you can like pull it up yourselves or whatever. Maybe I'll just pull it up actually because oh, thanks for the update. Because otherwise you guys might not see exactly what I'm talking about. But so one of the things I did here, oh, that's a nice thing. One of the things I did here is not only like you can see, I set the short pressure and dark pool lower. Like, so basically I had to make sure there was no like shorters in there. That's some bad timing on AMR. I almost didn't add it. That was dumb. It was like an added thing that I did. I almost didn't add it because I saw it taking off after earnings and I just didn't. And it was the highest basic material stock. So that was dumb of me. It doesn't really matter. It's just like, this is all, but like, yes, I basically took the highest in any industry, and you'll see like this is actually a really good lesson here. The highest in energy and real estate and utilities, way lower than the rest of these, obviously. But yeah, the idea was to create something that, especially if you're worried about the market right now, and like you could argue there was like, since I published this, there's plenty of reasons to be worried, and it might actually be a good time to buy AMR. But basically, like, yeah, I think you could hold this for a year, and the diversification will definitely insulate you from, I would say, a lot of the risks of like technology and communication services. There were a few calls I made, like ASML, for example, that even though like NVIDIA was higher in the signals, I did still grab like this because I just felt like it was a safer investment. But yeah, any questions, any comments from you, Stephen?
No, no, not for me. I'm sorry. I was looking at one of the stocks in Prospero that we're going to talk about next. So,
No, no problem. So straight into the new product then. Yes, we are finally at long last getting price in the Prospero app. So we're going to do price and price changes. So you'll see a live one. We've had other things with our unique signals that we want to prioritize, but a lot of people have asked us for it. So we're very happy that we're going to have that in. And I think especially with the changes, like the price changes that are being added, I think that's going to be really, really helpful for you to start like seeing like, okay, if you see, if you're seeing like a downward price change or an upward price change, and that's like coinciding with, attractive signals, I think that gets you like an easier yes than if you have to try. And like one of the things, we have like different time frames. So if you see like a positive, like 24-hour, 1 day, 1 week, if you see all of those price changes are good, all in one place, as well as say like the long-term signals, that's just going to be easier. That's going to be an easier way to like get you to the yes. And that's like really our goal at Prospero, like longer term, that like it can be a one-stop shop and as fast as possible to get you to a decision point on these things. So we think that's the next phase. I think we've got some other interesting stuff with price coming out. But yeah, we're pretty happy that we've made it that far.
Yeah, I can't wait to see it in the app. And speaking of the signals within the app, the next stock I wanted to talk about for our first official topic is FSLR. Um, Let me just give you some of the stats that it had earnings that were reported today, and it was up off earnings. So the stock bottomed February 23rd when net option sentiment was at 73. February 26th, net option sentiment went up to 86. It's currently at 87, and the stock has risen since then, and specifically off earnings today. And I think that's a good showcase of what the signals can do. But what I also wanted to talk about, because of this earnings, which is in a sector that was once a market darling, like AI is now, renewable energy. Maybe we could talk about some long-term investment trends that might come back or like are still there, even though they're in the background behind AI right now, that are going to be attractive over the long term.
Yeah, so um I think the first thing um is that if you look at it, it's just like a pretty straightforward graph. Like you see this all the time. Upside breakout, just like starting to go up before FSLR. I mean, sorry, a net option sentiment for FSLR, just like going up pretty consistently. There's a few like humps that you even see it go up before that, and that's just like like it can be that obvious sometimes, but like it's the kind of thing that like we built the signals to do. And like, a lot of people know about these earnings or earnings whispers or, before they happen. So yeah, that was like something that we like kind of see all the time. And, we give with like our pretty famous Tesla example, but yeah, like Prospero can make it pretty easy for you a lot. It doesn't mean it's right every time, but you do see like, if you're in Prospero a lot, I don't know how many people can like kind of attest to that. Like you do see a lot of instances where that number is out in front, whether it be up or down, out in front of the change. And then in terms of like, the AI, thing and like what might be next, one of the interesting things that I did want to talk about was what's going on with SoundHound AI. And I've watched it hit like a fever pitch. And then today's the first time that I've really started to say things to people online where it's just gotten like way too much. Everyone's doing it. People are acting like it's crypto and pumping it. And it's just like, just so you know, if you're looking around the internet and everybody's talking about like a fairly unremarkable stock like SoundHound, it's like fine, but it's got competitors. It's not that big yet. If everybody's talking about a company like that all around you, and I think this is very true for crypto a lot of the times too, it means you are a tool of some institution that is pushing that agenda. Like these institutions suppress information, they push information out there. We can all agree on that. You are basically, if you are part of this like gang of people that are pushing this. And the funny thing is, one of the groups is a Robinhood trading group that I saw in this. And I'll tell you like what makes it so insane to do that, right? The reason that SoundHound AI is a bad idea is not because it might go up further. It might go up further. But you just aren't in control of the exit. It will start to go down a lot eventually. And we've talked about this before. Even if you're right, like it's likely you're not going to get good execution and you time it perfectly as it starts to go down, you're not going to get good execution. And you might lose all of your gain by the time you get out if you're perfect. If you miss the start of the decline at all, you're like very likely to lose, even if you had a decent gain, just because these things move so fast when it's reached like the fever pitch that SoundHound AI has, right? So I think that's the important thing to keep in mind as you think about any of this stuff and like helping it reach a fever pitch. Like even as an early investor that might make a lot of money on it, you're not actually doing a kind thing for people as you load more and more, because the people that like get in late are almost definitely going to lose money, especially if your broker is Robinhood. because we know factually that they make their money by, like, if a bunch of retail investors are trying to exit a stock and an institution investor wants to jump in front of them, they will get to jump in front of them. So that's Robinhood's business model. That's how they're going to make money. They make money by you getting bad execution. So, like, that's what's so funny about this, like, Robinhood trading group. Like, especially. In terms of just, like, really, it's like, and one of the things I was talking about, even with, like, SoundHound today or whatever, like, people that are, like, looking for, like, early stage AI, is like, I would caution people. Like, I was talking to someone about this, where it was just like, I was just like, a lot of people don't even know shit about HI, like, about AI. So, like, why would why would anyone, like, even be thinking that they're qualified to, like, speculate on, like, has it reached the top? Which I do think we're getting ready, or already in a bit of a correction, just officially, right? But it's just like, if you don't know the industry, like, you can't even begin to, like, odds make on it. So that's the first thing. And it's always really funny when people are, like, asking other people on the internet this question, because most people don't know anything about AI. But I would also say, like, especially if you're doing, like, I think there's nothing wrong with, like, looking for the next best thing. But I would actually advise, unless there's, like, a really strong company, and I like, what I'm going to advise people on is, like, alongside this, unless there's, like, a really strong company, clear winner, like, we've recommended ENVX in the past for batteries. I actually do like that. I'm just, like, not really targeting growth stocks right now. But if you're looking for growth stocks, I do still think, like, ENVX, DNA, some of the ones that we've talked about in the past are still good. I just don't think it's a good market for growth stocks. What I do really like, given that it's a bit of a risky market, and given what I'm saying, which is just like, it's really hard to know, like, what the winners will be in these complicated industries. So when I'm recommending industries, what I like to do is I like to say, like, I would recommend REMX, which is like the Van Eck strategic precious earth metals ETF, right? I think we know that's going to be a growth area. Like, it's very easy for me to recommend that, because, like, I don't have to worry about, like, necessarily, like, which metals or, like, which companies or anything like that. You can just get exposure to the whole thing. And I do also think another thing like that is gold. I find to be pretty overpriced. I think a lot of people might find it to be overpriced, but that doesn't mean it still might go up. We talk about that all the time. But Ray Dalio's classic example of describing gold is, it's just like he actually uses, like, gold or blue chip stocks, like, kind of interchangeably here, where he says, well, the more people that know exactly what you know, the less money there is to be made off that, and the more loss. So that's, like, a really good example of, like, gold there, right? So I think that gold is a really good example. But what I'm saying is, like, as people, like, if there is market troubles, and like, the price of gold stays high, like, you might actually see more and more people flooding into these, precious earth metals, because they're less overpriced and have a lot more, like, growth in usage. So I think that's really the big one. And then the other thing, I think, if you talk about, like, a growth stock that we're going to look at, again, what was that? Was it CloudFront?
That's really interesting. I was not expecting your long-term friend to be precious earth metals. That
Yeah,
surprised
I
me.
mean, it's good. It's good in a risk managed situation. I'm trying to figure. That's what it is. Um, if you're looking for something like AI or whatever, that, like, I would say an industry that, like, hasn't been hit as much. And a lot of people, it's funny, when I was in Mexico, a lot of people were pressuring me about being like, well, what's the next next best sector? I talked about this. And I was kind of just like, well, like, and they were talking about chips. And I was like, well, I wouldn't really bet on any chip manufacturer, like, or anything like that, or even chips, because, like, who I'd bet on is cloud. I'd bet on, like, if you're talking, like, long-term safest, like, sector, I would bet on Amazon, Google, uh, um, and Microsoft over any like these cloud providers are just like they're going to do so much more services they're going to roll out. But tangentially, why I would recommend something like Confluent, which makes Kafka, um, which is a database that works on AWS, it works on all the cloud providers. Like why I actually like a place like Confluent is not even because I think they have like a very long history ahead of them, blah blah blah. I think a company like Amazon might acquire a Confluent. And you might get some appreciation there. But yeah, I would say like cloud services like that aren't as obvious related to AI, but are even more about like infrastructure as like things grow, like Kafka is, although it does work in like it is meant to work in high frequency data. A lot more of these apps are built like that, high frequency time series. So it is well suited for that. But I think those are the businesses that I look. But like the problem with some of this stuff too, just to like give the other side quickly, right? I really like Confluent as a company, Confluent like they use, but like the other problem and why I just say like, at the end of the day, like it's just safest to bet on the cloud providers is like, yeah, like because the cloud providers have started to like make chips, right? So that's a risk to NVIDIA. Like the cloud providers, like a really good example of like even how it works for each other is like, Google had this really cool like database that I've talked about before, like BigQuery, that actually was their internal database before called Dremel, that basically invented distributed database computing, right? Amazon just ripped it off, and Microsoft too. Like, so why I say that is like there are these caveats even in any of these growth industries, right? I could say like, yeah, I love Confluent. I love, data, like, you might call it data engineering, data management, database, next gen databases, all that stuff. You can call them like, if you want, maybe some more search terms. But the problem is like, Snow is actually, to bring it back, Snow is another company in that category, right? But even then, like, I can't promise you that even right now, like, Amazon isn't building their own Snowflake, isn't building their own Kafka, right? I don't think it's super likely, just because like there's risks of lawsuits, blah, 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 whatever. But that's just kind of to drive home the point that I think that's what makes it difficult to do any of this tech sector stuff. Because like typically you could say like in the past, well, that might be a monopoly, blah, blah, blah. But like Google for a long time has been pretty much one of the clearest monopolies we've ever seen by pretty much any definition of monopoly, and the government isn't doing anything about it. So, if the government isn't doing anything about monopolies, what does that mean? It just makes it so much more likely that these giants just get bigger and bigger. So, like almost anything, and when people want to throw out other businesses that they're just like, oh, what about this sector? Like almost any tech business, like, I just think the cloud providers, there's too big of a long-term risk of the cloud providers just like eating those businesses that like that's why I stay away from that, Steven. Because like I'm just like, okay, like I know like regardless of how it goes, people are gonna need precious earth metals. Like, and I definitely know they're gonna need chips, but like will like do I even know where to start at odds making? Like if one day Amazon, Google, Microsoft, even Meta's building their own chips, like if they figure out how to build chips as good as Nvidia does, no idea. And like the more time goes on, the more risk you have of like maybe they couldn't do it on their own, but maybe Amazon is like slowly hiring people from Nvidia and making great offers to them. And like it's only a matter of time before they've hired enough people from Nvidia that they know what Nvidia does. Um, so yeah, it's a little more complicated because there's like hardware, software things, and hardware is actually kind of easy to protect. But as we've talked about with NVIDIA, like it's actually like the software embedded in the hardware that makes them special. So like how easy that is to protect on an IP level, it's hard. Like, because I'm just like, even if I got like a really good lawyer right on here to just be like, well, yeah, um, that's pretty ironclad. I don't think they could really steal that many people from Nvidia, blah, blah, blah. Like, actually, these like hardware, software, these like hardware systems wired up with software, it's just so new. We don't even know how that's going to go because traditionally software patents are very indefensible. So that's what makes it very tough to look at any of this stuff on a sector based level because most of the stuff is just like there's that push pull. If it's like interesting and growth oriented enough to be excited about it, like say accelerated computing, like as a broader one, which I just like obviously like anything broad, even broader than chips, accelerated computing is wider than chips, right? I would say that. But like again, like while I'd say that, I got no idea if uh like how defensible any of these companies' moats are. And part of that is like, I don't think we fully figured out the legal system. And there's even things in the legal system like with these LLMs with the copyright stuff, right? We haven't even figured out like, even if you want to make a big bet, like just to do a different thought exercise, like, oh, chat GPT is going to change the world, blah, 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 which I just think the shine has worn off that a little bit. Like copyright laws could really change that upside. Meta and their Llama, their open source chat GPT, really changes that upside, right? So there's too many unknowns in even the known growth areas. And that's something I do all day, every day long, taking unknowns, turning them into knowns, like, or semi knowns, and making my best guess. I can do that all day long. But the problem is being a good value investor, being a good modeler, all of that is actually about building solid assumptions one on top of each other. So like even if we're talking about like, okay, I can odds make like a little bit some of this stuff like we're talking about. But if like there's this complete unknown on top of it, we're being like, okay, I think I can pick the winner amongst Nvidia, SMCI, like all the other chip things. Like, even if I'm just like, okay, I know who the winner is going to be ultimately, or who just is like going to gain market in the case of like that specific thing, who's going to take enough market share away from Nvidia that they're going to go down, or is Nvidia just going to keep their market share, right? That's the main thing to answer. And it's just like, even if I could answer that question, I have no idea how to answer the more important question, which is just like, how defensible is NVIDIA's moat against Amazon or Meta or Microsoft or Google or any of these giants that are making chips? Or to throw a different concept at you, they might not even need to learn how to make the chips. A lot of these places are working on quantum computing. And like the day they roll that out is the day like a viable quantum computer is the day that NVIDIA's stock takes an absolutely massive hit. NVIDIA, SMCI, all those companies. So it makes it pretty hard. But to wrap it up, like that's why I bet on the metals. Like, because the metals are inputs in a lot of these things too. So like it doesn't matter who makes them. It doesn't matter if it's, Nvidia or Meta, or it doesn't matter who wins. We know they need to buy these precious metals.
What do they call that? It's like picks and shovels investing, right? You
Mm-hmm.
invest in, yeah. Um, when you were talking about Google and how they're a monopoly, it made me think like if you take all the Magnificent Seven stocks, is there any industry that they do not touch? And like the only ones I could think, I thought of food at first, but then I was like, oh, Amazon has Whole Foods. Like oil production and like real estate were the only two that like came to my mind of every single like field.
Um, yeah, but like I think you might have like as the like I'll crush both of those for you, Stephen. Like like real estate, as these companies start to get larger and larger, like one of the things that it makes sense, like Google actually already owns a lot of real estate. Like so they might decide that they want to start owning a lot more real estate. And there you go. And like one of the things, like they're doing Google Homes, they're doing all that stuff. Like Google might start selling real estate. it's not out of the realm of possibility that they could start building like, oh, like tech enabled communities, built, owned, branded Google, like, Amazon certainly wouldn't mind that at all. I'm not saying that's definitely going to happen, but it's not a non-risk, like to the point of all of this. And then, yeah, like oil, like sure, they might not be on that in that game, but they're making self-driving cars, they're making other like renewable energies, and like, guess who stands to benefit from these new, like a lot of like, if you look at like the relation to solar and Tesla and like all that stuff, you've got a lot of base like Magnificent Seven tech giant threats to like the an existential threat to the oil industry as a whole.
Yeah, they're not in it because I don't even think they want to be in that industry. And Andrew's asking what was the name of that metals ETF again?
REMX, but I'll type it in too.
Yep. So there you go.
And I actually
REMX,
didn't look at
Andrew.
it. I kind of want to look at its historical. I haven't like looked at its chart. Oh, interesting. It hit a bottom. Yeah, it looks like a really okay time to buy it. It was at like
Value
90 a
pickup.
year ago, and now it's at 50.
Mm,
I guess people
interesting.
speculated on it and then they stopped. Yeah, this looks like a great buy. I might
Maybe
do
we'll.
some research and put this in my model portfolio. I mean, in my newsletter picks.
Yes. So time is flying by. So we have two more topics I want to get to. So let's try to
Mm-hmm.
get to these. So Disney and Reliance are merging their India businesses. Reliance was like the biggest entertainment company in India, and Disney obviously had their own. It was called, I believe, like Disney Star India. But they're going to merge. It was an $8.5 billion joint venture. The bigger conversation I wanted to get to based off of this story is I feel like, India being, I don't know if it's one or two in population, but it's like either one or two in the entire world. And everybody's so focused in the stock market and business world, in my eyes or mind at least, on China. And why isn't India like talked about as much? And will that change over time?
I'm sorry. I'm buying I'm buying some
You're
REMX right
you're
now.
live buying REMX. That's so
Yeah.
funny.
Like for
I'm about to get a thread in my email.
yeah. I even like had some terrible phrasing. I said REMX long open. Just getting it out. All right. Now I can come back to this. And I was multitasking a little bit. I was actually listening to the question. Yeah, I just bought it in the Prospero portfolio. Like I'm sold. There's a great chart on it.
So for
Like,
viewers,
yeah.
that's the first time I think I've seen you do this live stream. So you must really like the setup for people that are watching this.
I did
Yeah.
one other live. I think I
Did you?
remember. But
Yeah.
it's not frequent. Yeah, you're
Yeah.
correct. Um No, I really like it. It just went into the like I actually almost 2x'd it. But like as a short lesson before I get to the other thing, like I always ask myself something before I multi-weight. Like do I multi before I multi-weight something? And it's always just like a very good question for life too, which is do I want to die on this hill? Like, and like when it comes to meta, that's like really, really strong in the signals, like, sure. Like I'm willing to like or SMCI. Like, yeah, I'll die on those hills. Like signals are good. I believe in the macro story. Let's go. You can you can find me on this hill. I'm defending it. But like, my check with REMX was like one of the things was like, well, it's not Prospero signals derivative. And I have a general rule, and this might help any of you because it works very well for me. I have a general rule that make I don't make decisions without the Prospero signals, right? I don't go against them. And like generally, if there's not a good for setup, I won't do it, right? This one's outside of it. REMX isn't in there, so I don't mind. But like that's why it's not a hill I want to die on. Because like if I have to explain, and I don't really make excuses, but I would hate to have like it go down 30% and have it like 2x and just kind of like torch my results this year. And then have someone be like, well, why did you do that? And be like, I don't know. Like I like that was like silly because at the end of the day, if I'm not using the software that we've spent a very long time building. That's not very smart. But to answer the question about India, I feel very similarly about India as I do about China, where it's just like it's not all the way the same, like explicit manipulation as China. Like, but it's pretty corrupt. And there's like a big like have and have nots situation. And it's obviously there in America, but I think this is what a lot of people get wrong about America. Like, regulators are pretty powerful, and they're pretty powerful because like other hedge funds at their core don't really trust each other, right? So all of these things, like what a lot of people don't know about dark pools when they complain about them, is like dark pools were actually created for more transparency, because a lot of these transactions used to happen like off book, which basically means behind the scenes. And like it was that all the hedge funds basically were like, enough of them were like, well, we don't think all this off book stuff is that great. We should create a way for people to like legitimately trade outside of market prices, so they don't do all this off book stuff. And so, and at least record it. So I think, and when it's like off book, not move the prices outside of the market, like a lot of that just has to do with, um, let's say you're shorting a stock, right? And you don't want to buy it in the open market to cover, like because you don't want to drive up the stock and basically create like worse for your position. So you can transact on the dark pool, and that won't move the price up, right? Like the off book thing that, by the way, happens all the time in crypto, which is why I think it's inherently unreliable. It's just like instead of actually transacting the stock, you just make a bet on the stock, right? And you're just like, well, I'll go long, you'll go short synthetically. Like that's illegal. So I'm not going to call anyone out specifically for it. I'm not just not going to say like that I know that it happens. I've heard that it happens from different people. And generally what I do when I hear things like that, I ask a few other people like what they've heard, if that exists, and like some people confirm, deny, but like I don't lead the horse to water that much, and I do kind of like hear what they say. And I will say that like a lot of them describe it very similarly, in which I can like, basically give you that kind of thing. All right. Is there another question?
Yes, Spiky
Oh,
Dude is one. Do
well,
you see
let's do
Spiky
the
Dude?
other top. We might
Okay.
actually just want to do the model portfolio, then come to the questions and Spiky Dude, because we're running really low on time.
Yeah, yeah, sure. Let's flip over and then, we'll wrap with a little question and answer
Do
over
you
there.
want to try to ask do you want to try to answer Spiky Dude's question while I get everything set up?
Sure, I could give it my best shot. So he's asking, how do we use Prospero signals to measure corrections? Time in the market beats time in the market, but to avoid larger downturns, when do we know the storm has passed? So I believe by kind of looking at the time series graph and just understanding where a stock is trading, you get a sense of like what a bullish level and what a bearish level will be for net option sentiment. And you can see if the stock is uptrending or downtrending in that chart. And then like just seeing a option sentiment spike or decline, you could tell if the stock is going to go down or up based, or not 100%, but what Prospero thinks the stock is going to do based off the signals. Um, and then once you see the signals recovering, that would mean, at least in Prospero's mind, that the stock downturn would be over. But I don't think it's so long term oriented. I think it's more like in the moment.
Yeah, I like what you said. And like the only thing that I just add is like I don't think you can ever like say like the storm has passed. It hasn't. I think you can get like a good like live look, right? And and you check in on that live look or whatever. But like, yeah, I don't think you can like this is done, it's not done, whatever. It's just like it's too hard. There's too much nuance. Like I think that's the real issue that you end up running into. But I think where Stephen really nailed it is like, yeah, you can look at the trends and take a good shot at it, but it doesn't mean that it doesn't mean that it's ever that simple. And that's one thing that we all obviously ever tell like it's an active situation. You got to keep checking like and that's kind of it. All right. Let's see. Any of these, are we getting ready any of these dogs? Ooh, I think we're just probably we're gonna look at the technicals on SRPT, but we have 3 of them. I don't think we want 3. Yeah, actually we'll keep 3. That's on a nice trend up. And then option sentiment is high. How about W day? It's gonna be really tight. Why do we always do this to ourselves? All right, that was pretty good too. Yeah. Oh, Goog has been struggle city. Okay. I'm gonna do that's different. I think we're gonna do I think we might just be a little over. This is a lot of SRPT. I'm still thinking about that, but whatever. EXP, still like it. Oh, what's going on with Disney and Datadog? Those are low. I don't love that. I don't want to look at the hour. Yeah, I like Disney. What are you, Datadog? 15. Yeah, time to get out of Datadog. Okay. Anything else? That's actually pretty hot. That's high everyone. Apple. Looks like we're gonna get out of Apple. Oh, no. All right. Let's do short. Oh God. Is ZUMZ a win? Steven? Are you there, Steven? Am I here?
Am I unmuted now? Is it working?
You are. I
Okay,
think I was
ZUMZ is
frozen.
a win.
Okay. All right. X-rays, UMZ. Boy, we're really tight here. All right, that's fine. I just have to start pressing on soon. There's so many. This is like overwhelming. VFC. I think SPWR. That's good. That might be going up with.
First Solar.
Yeah, I guess not. No, it's the very much the opposite.
Mm.
NVRO.
By the way, we crossed 1,000. We're at 1,003 subscribers. So thank you for everyone.
All right, all of your pressuring has
Yep,
paid off.
always.
JWN. Oh yeah. Glad we held on to one. Oh no. Why does it like? Why does it do that? Genpack limited. Oh. Yeah, we're getting out of G. No more G. EVRI, DEI. I didn't even know we were still in BOH. No, staying in. Oh God, I think things are tight here. Really? There's no new ones? That's annoying. All right, no time. It doesn't matter. Boy, this is a big rush. 4 minutes. Let's see what I can do here. This is not even my good setup too. We do have this down to a nice little science though. No keyboard mistakes though. No time for keyboard mistakes. Oh, now the new one comes in. Two. It's like throwing it in my face. Yeah, sometimes they get caught up actually. That's the problem, but nothing we can do about that right now. Okay, 70. All right, we just have to. Ooh, look, CRM is pretty high up there. We might want CRM. Can you talk to me about the net option sentiment trend on CRM? Because how many years?
Trend is looking good. It's at 89 now. High of the entire trend. It's uptrending. Higher lows.
Great. I think we're gonna do. How about Microsoft? How's that on the trend?
Microsoft is looking a little flat. Kind of peaked at 87. It's at 83 now. It's actually trading in a very tight range, but it's just been flat recently since it went up from I think Spiky that dude said before 63.
I don't think we do. We have an open Microsoft. I don't think we do.
I don't believe so. No.
I think we added this yesterday. We added Macy's yesterday. I think maybe we want to get back in S to see. Okay. 20. What did we say was in here? God, this is the worst part about it. Okay, we're just gonna add.
Joseph asked why REMX isn't in Prospero, and I believe that's because if all the stocks or a certain percentage of the stocks within it aren't in Prospero, you can't add the ETF or ticker, right?
Steven nailed it. Gold
Yep.
star. So yeah, it's actually 85%.
It's a high
That's
bar.
like if I don't have 85% coverage, no, but it's like weighted, right? We're gonna be a little late. Oh, what's going on with
QQQ and SPY.
QQQ and SPY net option sentiment?
QQQ at 42. SPY is at 44. QQQ is really starting a downtrend.
Yeah, it has been.
Mm-hmm. Man, it makes me think about what market we'd be in right now if Nvidia had bad earnings. Probably be a rough place.
Bad, a bad one. I think. Do we have any SC? Oh, if you want to see, at ESCA one open, but it doesn't matter. You said 42 and 46, right?
42 and 44. No ESCA.
I think it was it. I've been burned on this before. We've taken. Do we have any open whoops? I think we might have some whoops open. It doesn't matter. Yeah, I don't care. I want another one. There's some great shorts here. Oh, we didn't end up doing. I do want to make sure we grab some of this stuff. Oh, no. I do want to make sure we grab some of this stuff. So, I like what ETN's been doing. No, I'm not going to do that. All right. We are about to be done. Oh, it's nice to do this like this 3 p.m. one because it like creates a cap on how long we can do this for.
Makes you decisive.
No, yeah, I mean, yeah, exactly. No, I mean, otherwise I'll just keep talking. There we go. Why did you do that? I don't know. I don't know. Don't care. I want to get this out. This. I don't know if I want 2x Microsoft with all these down picks. Like, yeah. What? What are you laughing about?
Oh no, I think that was my chair creaking.
I'm going to steal your headline, Steven. All right. So we're going to do that. And then I kind of want to look. I want to check out these new shorts. I want to just like take a look, and we're going to figure out what my favorite is. I think and like the allocation with the rest. CPRI looks pretty good. Apparel, footwear. I mean, I have other retail stocks. So I don't know if I want that. RMX went down. Failing me already. I am shorting leg. Which is kind of broader, like apparel, footwear. Engineered components. Yeah, that's different. All right, I'm going to open up a CPRI short. I really like that trend, but like, let me just see if there's anything. I think BW, what is this? Electronic technology. Oh, that 4 hour looks pretty strong.
Oh,
We're doing
wow.
what?
I see in the comments Snow is down off earnings, and I just looked, they're down 20%.
Damn, I'm glad I should have closed out more. Oh well, that's gonna hurt tomorrow.
Commenter Blake is asking, buying opportunity, or do we reevaluate the signals after earnings?
Reevaluate after earnings. Yeah, definitely not a buying opportunity. I'd stay the hell away. All right, we're loading up on some new shorts right now. That should tell you how I'm feeling. Actually, okay, we are done. Did we have anything else, Stephen? I'd love it if we did not have anything else, but
Yeah, we don't have anything else pressing. We can end, no problem.
wait, CRM tanked too?
I was looking at CRM; they were down 3%. Let's see where they're at. They're down 6 now. Maybe Snowflake is affecting. Wow,
I do
Snowflake's
know
down 24%.
they have an earnings call too. Damn, we did 2x on that. Bad timing.
Amazon's slightly down too. They're down 1%. I guess Snowflake and Amazon have very similar, like the cloud businesses. Is that why they move kind of sometimes together?
Well, I mean, no. I mean, and it's CRM. I mean, Salesforce and Snowflake are very different. But no, Salesforce has earnings today too.
Um, Unfortunate. Seems like we got some bad earnings after the market today.
Yeah. What causes such large shift with earnings? Things are just very sensitive with earnings, right? It's just like people like it changes models very quickly. There's also like momentum trades that says like it start to get out of control. So you have like a lot of bots that just look for different earnings. But I think we're probably good to go, right? I'm tired. Unless
Yep,
anyone has any
we're
other
good.
questions.
I'll just say it for one last time for anybody's new here that wasn't when I said it before. There's a Spotify link in the description. Follow us on there. Our live streams will be available as podcasts. But thank you for coming. We'll be back normal streams next week, and we'll be in person on Wednesday. So there's
Yep.
that.
All right. Thanks.
Bye, everyone.